In the meantime, let's check in down in Miami, where after 2 years of decline, the art market is snapping back, especially, I can imagine, the last couple weeks with crypto. Art Basel is the biggest test of the year, and it starts tomorrow with hundreds of millions of dollars worth of works up for grabs. Robert Frank is there, of course, joined by someone with his finger on the pulse of where the money will be spent. Robert, welcome.
Kelly, good to see you. Well, you're right. Rising stock markets, Bitcoin 100,000. The mood is very good here at Miami, Art Basel, Miami Beach. Joining us is John Mathews. He's the head of private wealth management for the Americas at UBS. John, thanks for joining us.
Great to be here, Robert.
So what's the mood feel like? You talk to a lot of the wealthiest collectors. How are they feeling?
Well, I think they feel really good. As you just mentioned, asset prices have really gone up across the board, including the virtual currencies. And so the mood is great. You know, we've been sponsoring Art Basel here in Miami for 22 years. We will have over 5,000 of our clients and guests in our lounge here. And we have the need for over 10 times that amount requests for tickets to come. So the mood is really good. I would also say my unscientific kind of finger in the air pulse after one day is that this is going to be a good year for the art market.
And you advise the wealthiest clients around the world. How are they feeling after the election? And looking more broadly at the investment picture, what opportunities are they seeing? How are the wealthy positioning right now for the next year ahead?
Yeah, well, I think they have been positioning. If you look at just what the markets have done across the board, across asset classes and different sectors, I think it's, first of all, interest rates have stabilized. We don't anticipate those going up any longer. M&A is roaring back, and so that's good for the markets. You've got this longevity crisis. People are living longer, so the great wealth transfer is happening before our eyes. And so you couple that with this kind of pro-business feel of the market with what's just happened in the recent elections. People are getting investing. And, you know, there's been talk about all of this cash on the sidelines for the last couple of years.
Yeah.
It's being deployed. And there's still a lot of cash on the sidelines, but that cash is being deployed.
So
and we see it with our own clients.
Where is it being deployed right now? Is it into developed market equities? Is it into private equity? When you look at the high net worth family office space, where are they putting new money right now?
Well, let's first talk about the public markets.
Yeah.
The U.S. is the place to be. All right, the markets have been resilient, strong. Fundamentals are incredibly good. Now, you may say they're at full value, but at the end of the day, the most liquidity, the best liquidity, and the best fundamentals are here in the U.S. Though with that said, many of our clients are looking to the alternative space. If you just look at endowments and foundations, up around 40 to 50% are in alternatives. Our most recent global family office report said our family offices in the United States are allocating up to 35% of their assets in alternatives. And we're seeing our wealthy individual investors up the ante as well. We're seeing up to 15 to 25% in alternatives.
And when you say alternatives, we should say that's private equity, it's venture capital, it's direct deals. And one of the things that surprises me, private equity has not been a good investment. Certainly, if you look at returns over the past couple of years, there's not a lot of IPOs, not a lot of exit strategies. Debt is very expensive. Why is private equity, particularly direct deals, so popular with the very wealthy investors right now, given that it hasn't been a great couple of years?
Yeah, I think it's the buying up. I think they think of it as an opportunity right now. As we look at the markets, we feel like they're fully valued. But if we look at the private equity markets, we actually think they're down about 14%. So we think there's some excess returns there. But remember, many of these investors, they're in it for the long run. So they take out the daily volatility of the markets. So then the liquidity premium here is worth the bet for them and worth the wait for them.
And then in terms of, you mentioned the next generation, we hear $84 trillion about to pass to the next generation. Do you think that is really going to happen? Is it happening?
It's happening right now. We're in the third inning of a 9-inning ball game that's going to go to extra innings in the Great Wealth Transfer. Not only $84 trillion in the next 40 years, we have over $25 trillion happening right now in the next 5 years.